Hello guys, in this video we try to focus on uh, a good industry. We go to each of the stocks and we try to see from the beginning of the industry, and we try to see the stocks at the beginning. We take a date, any date that I show you, and then we try to see what's going on. Okay, so let's go to the chart. Okay, now let's go and search for the first thing that you find, which is aerospace defense. We will take the second one because it has more stocks, which is called aerospace defense products and services. We click on that and we see, as I told you, the stock has been going up, but we take just a date, which is, what is it? Let's say we take 12 February 2016 as an example. Okay, this is the beginning of the industry, how it began to go up. It means to buy from support line, as we said. Okay, let's go to the stocks and see 12 February. Is it the same day? Yes or no? Okay, we take this LMT, which is Lockheed Martin Corp, which is one of the biggest companies making weapons in the USA. Okay, so let's take the date of 12. Okay, we find it that it's nearly the same. It means what? The guy or the mutual fund managers who want to buy this industry, they begin to buy this stock, which is LMT. We go to the second. Here it is, let's say here to see the first day. It's a 12, it's the same. And you see how Boeing Co., which is a company that makes planes and so on, is the same. Understand that these people are choosing biggest stocks or biggest companies. We see the other one. Now we try to see this one. Let's say it begins with 11 or 12. It's the same, but understand that here, as you can see, the trend has stopped. It didn't continue. That's why here is the problem I'm telling you. Following the stock is a skill. It doesn't mean that when the stock is going up, that it will continue like the other stocks. Because see, the other stocks, they continue to go up for 2 years. Understand, it is 2 years. It's nearly 2 years. Okay, it's from as I told you, 12 February to now December 27. Okay, and it's the same as this one. But the third one, it didn't make it. It begins yes, with February, but let's say it ends like in October. After October 2016, things is not as good as before. So it might that this mutual fund or these guys who are buying here, they stop, they sell everything because the stock is going down. It means there is a downtrend. Okay, when there is a downtrend, it means big guys are selling. This is something very, very important you should understand. Okay, when big guys are buying, they push hard the stock. Let's go to the other ones. Excellent. It's the same. They even begin with January. So these guys who bought this HII, okay, they bought it earlier. The stock was, let's say, 121. It goes to 237. GD, yes, it's end of January. LL is the same. TDY, it's at the end of January. It means at the end of January and the beginning of another one, another. This, it means those people, mutual fund, they are not interested in this one because you see it's not doing that much. This one, let's say here, it's yes, it's the beginning of February, end of January. Excellent here, begins like end of January. This one, it's February, the same. Let's see if we find some stocks. Okay. So see this company. It has not been doing all the way February 2016. It means those guys, they didn't buy this company, which is called AVAV. That's why there is nothing to show here. You see, here is February, okay, and here you will see until June 23rd, 2017, there is nothing. It means all this. If you, for example, if you invest in this company, like from February 2016 to June 2017, you are not getting nothing. This company alone is not bought. It was bought just recently. Let's say from 35 it goes to 60 to 56. Okay, it's a very sudden thing. A big guy, maybe a mutual fund, maybe others, they go and they buy this company at the end, and it makes good at the end. Okay, but at the beginning, from last year, it did nothing. Now this, okay, the beginning here at the end of January, it goes good, but later bad. It means those guys who bought here, they are not interested to continue, so they sell everything. Another thing is not good. This is good. This is good. This is creepy. As I told you before, when you find the stocks like this, you just forget about them, okay? Because there are a lot of short sellers, as you can see, and gap down, gap up, gap down, a lot of stuff. So here, for example, so from the beginning of the year 2016, in February, for example, there is a good trend, but the people, they stop going, and maybe this mutual fund have sold everything here, and it goes nowhere. Because when there is no big guy behind the stock will collapse. And this is what I'm always trying to explain here. In February, the stock was going up a little bit, but this company was dropped and there is no one who bought it, which is so bad. Now, this company is good, as you can see here. And you can see all are at the end of January, beginning of February. It means these guys, they begin to buy on the same thing. Okay? This is creepy also, not good. Also this one. This is a penny stock, as you can see. Okay? It has a pump and dump scheme here, as you can see. From 8 it goes to 15, it means nearly doubled in one day, and then the stock go down. This is just manipulation of stocks. Okay, this stock has been going up, and then it goes down. Most of the mutual funds managers, they don't buy penny stocks. I'm just showing you this. And as you can see, in end of January, beginning of February, the stock was $7. Now it is $1. It means most of the time investing in penny stocks is a bad thing. And the last one, it might be taken from the exchange, because here there is no, it's $15, but there is no volume. It means there is no trading. Maybe it is taken from the exchange, or it was bought by another company, or it was just enlisted from the stock market when it can't meet the requirement of the exchange. Okay? So this is just to show you that not all the stocks are doing well. Some are doing very good as the industry, some are doing medium, some are losing money, and this is the thing about the market. So as you can see, we are in the same industry, but the stocks doesn't behave the same. The reason for that is that the buyers are not the same. If the majority of the stocks are going up, we don't know that it is one mutual fund or many, because there are some mutual funds managers that are small, and when they see something moving, they just jump, okay, to this trend, because they see that it is an opportunity to make money, okay? But they are small. It means they don't have that much money. And some companies are not bought. It means there is no big guys. Now, when there is no big guys, what do we have? We have only those people who are mostly day traders. They trade because they don't care about the trend. If, for example, the day is good, it's going up, they go long. If the day is bad from the beginning, they short. It doesn't mean they always make money, but there are mistakes because some fluctuations of the day. But most of the time, you find these stocks have only day traders. Or you can find some short-term traders or other traders who they get recommendations, buy this, sell this, and like you know about analysis and the other stuff, or newsletter or whatever. Okay, so that's why these stocks, they don't make money. And if you stay 1 year, 2 years investing in this, you are just wasting your time. That's why for us, we will tell you in my next video, I will show you how my strategy work, okay, for this kind of stocks. How do we recognize this kind of stocks? And I will show it in my next video. Stay tuned.